Vineet, hi. It's been a scary day to wake up to, but just looking at this objectively, do you get a sense that we're still in a trading range, or has the trend now moved decisively downwards?
I think from what we have seen on Friday and this morning, it looks that there is definitely a change in the trend. More so because there are no supporting, news or supports that are coming even regionally or internationally. This morning, the fact that it has moved down quite sharply does give me a sense that there is a change in trend. However, we must also remember that if there is a change in trend, there will also be very sharp relief rallies that may come about, and therefore, even though this may not be the bottom, it is very difficult at this stage to even decide to go short, for example.
So when you say change in trend, you would recommend selling on every bounce that we see, so don't get fooled by any of these relief rallies?
Yes, I think that is what our sense is, more so because we were looking at the monthly and the quarterly charts, and on the monthly and quarterly charts, there is a weakness. For example, all the major indices, Nikkei, Dow Jones, are sitting on very strong supports at this point in time. Nifty, for example, for our quarterly chart is at 8,000, which is a strong support. If we end this particular month below 8,000, then I think there is continued weakness.
Okay, so what do you think the base for the market has moved down to? From now until the end of the year, what do you think the range for the market could be?
I think it is difficult to estimate as to where it will be at the end of the year, but what I could perhaps sense out of the way the build-up is in the futures and options market, it looks that 7,900 is where the focus of the FIIs is as far as the put protection is concerned. They have built position between 7,900 to 8,100 to the extent of about $4 billion. So that should hold for the moment. And of course, we are already in the expiry week, so we will get a greater sense by Wednesday, Thursday.
Did you take a look at what's happening in the currency market as well? 2-year low for the rupee as we speak. What's your sense?
I think that indeed is the center play of this entire slide that we have seen in the equities market. It was precipitated by the currency market in the emerging markets, of course starting with the China's devaluation. So it is not surprising that rupee is under pressure. On a relative basis, I think it is a bit better than some of the other emerging markets. But clearly, the currency wars and the equity slide-off also affect, how the import and export markets shape up in terms of our competitiveness. So that also will be decisive as and when this takes some stable ground.
Okay, by the way, there are some big accidents now in the broader market. So just take a look at the stock of SKS Microfinance. There's a sudden 12% cut that you're seeing in that name, and the volumes also are picking up quite a bit in SKS Microfinance, as you can see now to the lowest point of trade over there, and the mid-cap index is now advancing to a 4% slide with big cuts coming into many of the small-cap names as well. Vineet, if the trend for this market has changed, then as for the next series, for the September series, what could be the most prudent strategy to initiate?
I think what will happen is actually a bit of a challenge, because in the next 1 or 2 days what we will see is the following. The local professionals and the HNIs and the prop desks in the local market are perhaps sitting on the long positions, or those who are sitting on the long positions will come out in a hurry to get out of their long positions because of the large mark-to-markets that will happen this morning and perhaps even from Friday close. On the other side, the FIIs who have been sitting on a cash futures arbitrage book will find it difficult to roll when they come to roll on Wednesday and Thursday. So I think that is going to be the challenge for the short rollers. And therefore, whether the market will give an opportunity for them to start building new positions in the fresh R book remains to be seen. Whether they will be able to successfully roll will also become more clear by Tuesday, Wednesday, as hopefully the dust settles.
What's the chart of Bank Nifty telling you? What's been the kind of build-up in the futures and options space?
And do you see it headed significantly lower from here on?
I think, you know, banks have always been, especially the PSU banks, have been a bit of a high beta play over the last several months, and therefore the fact that they have all been cutting their gains that they achieved a week, 10 days ago is all coming to a naught. PSU's bank were under pressure even on Friday and this morning. So I think that will indeed be under pressure even going forward.
Okay, we haven't taken a break, so we'll do one thing. We'll just take a short break and come back to you with more questions. But there's been no substantial or
8050 on the upside, but it's still a gap down opening of close to about 3 to 3.5%. We're in conversation with Vineet Bhatnagar, the MD of PhillipCapital. Vineet, earlier you were telling us that how the prop people or the HNIs have long positions, so they will have to unwind. The FIs have cash futures arbitrage, which basically means that when you have to unwind that, you're going to be selling cash and buying futures. So net cash is going to be sold both by the HNIs and FIs. So then what gives you the conviction about that 7,900 or 8,000 level being held as a support?
I think the bigger reason is that even though the market has changed its trend, and of course we are looking at levels far below 8,200, which is what the earlier support was propounded to be last week, and this morning it is 8,000 as we are looking at it. The reason why I think 7,900 will hold is because there is this panic that has set in, as you will see even in the India VIX, which has shot up very dramatically this morning to 24. So whenever there is a fear, there is a panic, the market does create a bottom, and that bottom will then, from that bottom it could actually rally 200, 300 points in the Nifty quite easily. So it is important to know that going short at the bottom 8,007, 8,900 might be a very instinctive trade to take, could actually turn out to be a double whammy.
Okay, but Vineet, sometimes what happens is that in expiry especially, it's momentum that talks. And a lot of retail prop and HNIs have been stuck with long positions, as the data is indicating. Do you think that further cascading impact can take the Nifty towards 7,700, even 7,600 purely by expiry? We have seen something like play out in the past as well. It
is indeed possible. Of course, it is the equilibrium that will come about in terms of the forces of the professionals and the institutional clients. It is possible. So 7,900 is a number that we are looking at only because we think that everything is looking oversold. Yes. There is a panic, and therefore in the next 2-3 days, we should be seeing a bottom which could be at 79. But it is possible, as you are pointing out, that it is 77 instead of 79.
Okay, just stay on, Vineet. We have Atul Suri as well, who joins in to give us his view on what's happened this morning. Atul, after the carnage that we've seen in early morning, do you expect to see more downside on the index? And how are you approaching the MSCI Emerging Market Index now?
Extent of fall on Friday on the Dow and most global indices will have a knockdown effect on India. To expect that we are going to stand out or relatively hold out is not. We are part of a basket, the emerging market basket also. And if you look at the MSCI emerging market indexes, you do see that there has been a breakdown. So I do think that we will feel the knockdown effect. Whether it will go below 8,000 or so is something which you'll have to take up in a measured way. But what I do think that will stand about India is that it will be a relative. That's something even I saw on Friday. We are going to be relatively outperformers. That does not mean that if the global markets are crashing, we are not going to be a positive day. But I do think that we will relatively outperform. And as and when markets stabilize, I do think that we will be among the first markets that will actually recover. And this optimism is really sort of based on two things. That yes, the equity global weakness is going to hurt us, but I do think that the decline in commodities, which I think is very secular and which is going to be a multi-year kind of phenomena, is really going to benefit this country. And I think that the currency depreciation in the short run is going to hold out, or I think money is going to flow back to IT and pharma. And to some extent, those will be the spaces of outperformance. So yes, there'll be a knockdown effect. Whether we'll go below 8,000 is something you will have to take a bit of a measured view on that. It's quite volatile in a day-to-day situation. But I do think that India will relatively outperform. It will fall hopefully less, and I think it will be among the first markets that will sort of propel to higher spaces. And you can already see that kind of outperformance if you look at other charts in other emerging markets, you will see that there has been, especially the commodity-dependent countries, the knockdown has been large, and I think India will relatively hold out. So I think we are in very spectacular times, especially is what is happening in the commodity space, and these are like almost once in a decade kind of declines that we are seeing. And India, I think, will benefit in the medium to long term. Short term, definitely there's going to be a knockdown effect, and it would be very naive for me to think that, well, they are all going to be down and we are up or we are something. No, we are going to sort of get hurt. If the extent of fall is larger, we can go below 8,000. But as I said, those are semantics on a day-to-day basis, but it is not my understanding or expression of a medium to long-term trend.
Okay, so that's about the fourth guest telling us this morning that India will continue to outperform. For now, the Nifty and the Sensex have stabilized. The Nifty is at that 8,035 level. So the selling pressure has not accelerated on the index level, but yes, it has as far as individual stocks are concerned. So take a look at something like Axis Bank. It's now down almost 7%. Volumes continue to pick up on some of these banking names, and Yes Bank, as we pointed out, are also down about 6%. Vineet, what do you do with some of these outperforming spaces like IT and pharma? Investors or even traders have made money in the last fortnight on these names. How do you approach these large caps?
I think the classical defensive play that these two sectors offer are clearly the safe havens, if you will, as far as the traders are concerned. More so because of the exaggerated currency weakness that we are seeing, the competitiveness, the national advantage of India in the IT space and pharma space will of course stand out, and therefore those who are sitting or have long positions in the IT and pharma space in the cash portfolio should just sit tight. Those who are taking tactical positions, I think they could look at trades in the large cap IT space anyhow.
Okay, by the way, some news in Bank of Baroda, where the board has approved that they will be doing a preferential allotment to the government, whereby the government will infuse 1,786 crore into the bank. So the government of India will infuse 1,786 crore into Bank of Baroda by way of issue of equity shares on a preferential basis, and now the shareholders will have to approve this on the 28th of September 2015. Vineet, after this 8,000 level, what's your sense? Is 7,600 more likely or 8,500 more likely? So give us a medium-term perspective on the trend of the market.
I think if the bottom gets formed, the way it is, the way we are able to assess this morning on the basis of the put distribution between say 7,900 to 8,000, I think it should give us a relief rally which will take it to 8,200, 8,300, and it is easy to make this kind of an estimate only because in the last 5-6 trading sessions the market has fallen, Nifty has fallen by about 500 points, right? So for it to retrace about 1/3 of that fall or half of that fall, it's something that the technical analysts always point out. So on that basis, it is safe to say that a relief rally of 200 Nifty points is possible.
Okay, Vineet, a lot of questions on Twitter as well. So someone asking me to ask you, in September series, is buying a Nifty call today, would that be a good strategy?
Yeah, if you are getting a 7,900 strike price, you could look at 7,900 or 7,800 strike price. You can buy a Nifty call.
And what would be your target for the September series?
For the cash Nifty, I think we would, as I was saying earlier, it is difficult to say as to where it will end by the end of September.
Yeah, but during the series.
But during the series, I think it's something like a 200-point movement in Nifty is possible.
Okay.
Okay, well, just stay on. For now, the Bank Nifty is down almost 4%, so that's the big underperformance pocket that we're seeing this morning. Atul, you have stayed away from the banks for a while. You've been recommending IT and pharma, but what do you do with a heavyweight sector like financials, and how do you see the trend pan out from here?
For me, banks has not been a trade. Yes, there have been very good spectacular turns in some of the banks in the last month or so, but being a trend follower, it's not the space I have been or focusing on. And as I pointed out earlier, that being a trend follower, one tends to get into maybe a little late, but one does get into longer term trends. So my focus is more on IT and pharma, or my skewness is towards those spaces, some even auto stocks for that matter. So where is the bottom for banks? I don't know, because in my style of trading and investing, I'm not in that space. So where is the bottom? I don't know.
Okay, Atul, since you are bullish in the IT and the pharmaceutical sector and you mentioned them as outperformers, should long-term investors use this fall to get into these stocks?
I definitely think that these would be opportunities. Exactly at what level, which stock, as I said, these are very, very technical or very individual driven based on stocks and markets on a day-to-day basis. But I do think, because these are not a question of one quarter or a rupee depreciating 30 bips or 50 bips. These are very long-term trends. These are trends that are 5-10 years, and you will have your ups and downs. And when you have a very long-term trend, which I think is panning out in these sectors, I think sharp corrections are always opportunities to buy. So I still feel that we are a part of a larger bull market. Sharp corrections would be opportunities to buy, and I think that sectors that will stand out, and they have stood out, because I'm a trend follower, have stood out in the last 5-7 years, has been pharma and IT, and I think that's where I would like to focus on.
No, I take your point about the fact that, in the longer term, this could be a buying opportunity for sure. But, Atul, the ghosts of 2008 continue to haunt the investors and traders alike. And there are questions being raised of whether this is reminiscent of the correction that we saw in 2008. What's your sense?
The kind of declines that we saw on Friday do indicate that we would, but if you talk about, like reminiscence of 2008, I don't think so, because, in our recent memories, whenever we speak of a meltdown, our mind immediately jogs back to 2008. I don't think the world is going to be that bad. Yes, we may have corrections, whatever, I don't know, it's 5%, 7%, 10%. As I said, those are, about specific charts and specific stocks for someone like me. But I don't think you're going to see a global meltdown per se. I do still think that it's going to be very specific, just as we say bottom up in terms of stocks. I do think that it will be bottom up in terms of countries and markets, and I do think that India will stand out, and my optimism flows from the fact of what is happening to global commodities, because one of the biggest beneficiaries of a big global commodity meltdown is going to be India, and that's what gives me a certain medium to longer term optimism as far as the Indian markets go, and that's what retains my longer term bullish view on the market.
Okay, would you concur with that view in any way, Vineet, that at this point in time we are in a bear phase, but the longer term bull market is still intact?
Yes. I also tend to agree with that view, because I do believe that this is a readjustment that we are seeing of a very significant nature, and therefore we cannot undermine what we are seeing in the markets. I think a very large economy like China is readjusting itself, and therefore the shakeout and the repercussion of that is being felt everywhere. But as we start settling down, the big ships of US, perhaps Western Europe, will show us the way forward. And India, in that respect, I agree with Atul's view, will stand out. I think we will indeed be one of the first markets to recover once the stability is around us.
Vineet, let's work with the hypothesis that we do see a bit of a relief rally to 8,200, 8,300. What's the best way to play it? Any trading strategies that you would recommend for the near term?
I think one of the ways to do is to just do the Nifty calls, because you're not necessarily taking a position on an individual sector or an individual stock, but you're just taking a call on a relief rally at the broad market level. You could play it even by doing a call spread. In terms of a bull spread kind of a strategy in the Nifty. Otherwise, this can be played if stability or a bottom is near you, by just doing a bottom-up approach of a very high conviction stocks that you always liked. Okay?
Any stocks that you would recommend?
I guess we will all go back to what we have always liked about the domestic consumption theme of India, and therefore if this were to play out again, if not in the next 12 months but 18-24 months, you will veer towards autos and auto ancillaries type of names.
Vineet, the one problem for this market is it's not been able to find leadership this year. Bottom up stock picking is fine, but at the end of the day, for bull markets to survive or to thrive, you need some leadership stuff. Reliance looked like it was taking leadership position, that fell by the wayside. ITC has not performed at all. Banking has collapsed. Pharma alone, can't do that much for the market. So where do you see leadership for the narrow market to move up from here?
I think the leadership in terms of a single sector or a single basket of stocks is perhaps not how even I would look at constructing the portfolio or approaching the market. More so because even if you were to look at, for example, a consumption theme, how beautifully it crisscrosses several sectors is what this is all about. So when you talk about consumption, you're really not talking about only autos or only FMCGs, but you are actually taking it across to multiple multiple sectors. In one way, it could also be a nicer way to look at a recovery or a stability in the market, where you're not looking at hinging the entire performance only on a leadership of 2 stocks or 5 stocks or one sector. So I'm actually not too peeved about that.
Okay, by the way, just take one look at what's happening with the Asian markets. It has gotten worse for them. So if you thought India was bad, Asia is far worse. Hang Seng is now down more than 1,030 points, is at the lowest point of trade, about 4.5% gone. And Shanghai is now down almost 9%. Atul, we've seen a big collapse in emerging market currencies and a big outflow underway in emerging market equities as well. I know you track the MSCI EM index closely. What's the chart telling you? Have you seen a breakdown in that chart?
When you look at the MSCI emerging markets, you do see, as I see in technical parlance, a breakdown from a symmetrical kind of triangle, which does set lower targets. And that is painful. But when you really go, and India is a subset of that, so we are going to find our redemptions in that space. And that is very evident from the FISL numbers. But the fact is that, beyond a point, when people just go across the board and start looking at the various components, you will find that in this basket there are a lot of countries that are commodity dependent. For example, Brazil. Look at what's happening to the Brazilian index or the currency, and you find that there's disaster happening vis-a-vis India, which seems to be another end of the spectrum. So I do think that after some time people are going to differentiate, but yes, the whole emerging market space, along with what's happened in the Chinese index, is I think one of the weakest spots in global macros is the MSCI emerging market, and that is the kind of knockdown effect that you're seeing, or the sell figures you're seeing in FIS consistently. But to offset that, I think one of the most heartening things, and I really keep my fingers crossed and hope this continues, is what's happening with the domestic institutions. You are seeing very good flows, and barring unforeseen some big global accidents, I think that the mood, my interaction with investors at various investor camps, and especially the retail, is showing a bit of a shift. And I think that's positive, because if you keep getting these flows, to some extent it will buffer the kind of sell-off that you see. And the Indian SIP money which is coming into mutual funds, I think has a much longer term commitment than compared to a hedge fund which is just playing global macros and trading the emerging market index, or etc., etc. So I think that the emerging market space, unfortunately, is weak, and we are a subset of that, so we are going to see our share of selling. I hope that the thing has been offset in the medium to long term with the total DI numbers and the flows that Indian retail and HNIs are having into Indian mutual funds through SFIs or whatever the route there is.
Okay, fair enough. Vineet, the 2 stocks that have disappointed the street the most this year have been ICICI Bank and Tata Motors. I mean, both those stocks, as we speak, have hit fresh 52-week lows. Tata Motors, of course, sitting at about a multi-year low. How do you approach both these names?
I think if we were to base a recovery in the market after this entire rout is over, names like ICICI Bank are an integral part of any serious long-only portfolio. So from that respect, we would continue to see this particular name appearing, in people's portfolio, and to that extent, I'm quite okay about, ICICI Bank. As far as Tata Motors is concerned, we have understood that, it is important to keep an eye on even what is happening to Tata Motors and its product line in international markets. Now that China is going through a complete overhaul as far as the local demand is concerned, that will be a big overhang as far as the JLR is concerned, and therefore it could continue to be under some kind of weakness even going further.
All right, Vineet, we'll leave it at that. Thanks so much for taking the time out and joining in. Some recovery